Hey traders, this is Ron, a market tamer. Hope you guys had a fantastic weekend. As always, everything in this presentation is for educational purposes only. Given the video is coming out late in the evening, we'll take a really quick review of the markets. We'll just do SPY, diamonds, gold, silver, bonds, and we'll cut it there. So here's the SPY. It was down on Friday, but before I look at that, here was the October. That was the previous all-time high back last year. Then we went down, had the December massacre, right? And then since then, it's been straight back up. And all the worries we talked about over here, is playing out here, yet we're higher in the market. Just remember, my opinion is just block out all the noise. Let's just trade what we see, not what we think. So if we zoom in closer, we have what looks like a double top. Why? Because there's a top here and a top here, hence it's a double top. There's no way to know if this is the mother of all tops. If we break out to new highs, that is incredibly bullish. As of right now, we're simply range bound with the high up there right around 302, and there's some decent support here around 285, and then down here at this V-like turnaround in June at 275. So really it's basically, again, 302-ish, 285-ish. However, I want to highlight this. If I zoom in here a little bit, there was a teeny bit of bearish engulfing. Volume wasn't very good, but it technically is. We came back up, reversed off the highs, and then we came down. And then last week we had bearish engulfing on Tuesday, bearish engulfing on Friday. The volume isn't huge on these bearish engulfing candles, but they're still bearish engulfing. And we're probing lower here. Sort of like sticking your foot in the water to see if there's going to be a shark or something biting you, You hit the 50-day the first time, you bounced. Second time you hit the 50-day, you went below it. Third time you get down and hit the 50-day, you got below the previous one and the one before it. See how this probe is going? It's almost like you keep knocking at the door. Next time we get down there, it just might escalate or increase in speed, and we end up closing at the lows of the day. And the target would be down here at 284. As we walk into Monday, I would say caution is warranted. What is the technical trend of the daily chart? Well, on the spiders, we're below the 20-day, so the 20-day period is no longer bullish. We get below the 50-day, which is your orange line, that's the institutional moving average, the bulls lost their edge then for the time being. Now, it doesn't mean the end of the world, because if I zoom back out just a little bit, look what happened here. We got below it, target was down here, never happened. Higher, low, higher, low, higher, low. We go higher, double top, run into previous highs, we roll over. This could just be range bound. Once the weeklies get more bearish, that would be more of a concern. It's just not the case right now. So let's speed up here. Let's take a look at the Qs. Here's the NASDAQ. Now the NASDAQ one compared to the S&P is a little worse. We did have bearish engulfing here. We also have technically lower highs. Bearish engulfing here on Tuesday. So that would have been Thursday, Tuesday. Now we couldn't get bearish engulfing on Friday because it was simply just weaker right out of the gate than the spiders per se. Look here too, lower lows, we're probing. Target on Qs, 182, and then maybe 180. We break 180, then we go back to the June lows. We take a look at the Dow via the diamonds, DIA. Holding up better than the spiders, holding up better than the Qs. We aren't even at the 50-day. We don't have lower lows. We don't have those probing lows in consecutive attempts. It's sort of hanging in there. So diamonds holding up better. Just watch the 50-day as well, which is around 266. We break that, the target would be down here, 254 or 256. We take a look at the Russell 2000, the IWM. There's been a lot of talk of these guys because they're so underperforming. Remember, if we just look back 6 months, it looks like, oh, we're near some highs. Yeah, well, guess what? If I go all the way back here, we can see that the all-time high was put back in September a year ago. Huge sell-off, big V rally, sideways, 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 sideways. So we need to get above 160 for a breakout to the upside or below 145. Right now, we're about 9 points off 160, but we're only 6 points off of breaking here. Otherwise, it's just range bound. So TLT bonds, if we zoom in here, they broke the 50-day, looked like bonds are ready to roll over. That was back on 9/13, about 17 days ago. We rallied back up, turned it bullish, and now we're just pausing. The bulls get the edge here on the daily chart on TLT, but I wouldn't call it amazingly bullish. This kind of break and then reversal, it probably fakes some people out. I would want it to get back above the previous high, and frankly, for TLT to really look bullish, we need new highs. That would make it look very, very strong from a bullish technical perspective. Right now, yeah, it's bullish, but again, caution here because if the markets roll over, then bonds might go higher. Just keep an eye on that. It all depends what the driving force is going to be. Necessarily, bonds do not have to go up with the market. Excuse me. Bonds don't have to go up and the market goes down. They could both go up together, both go down, depending what those circumstances are. Now here is gold. It's also range bound, 146 or so, and then down here to 140. We gapped lower, but finished. Let me zoom in here. You see that a little better. We closed higher than the 50-day. If the 50-day is lost, then we could come back down maybe into this area, 134, and then gap fill down to 128. If we take a look at silver, it also held the 50-day. I think this week could be a very, very interesting week. I don't want to go out on a limb and just say, oh, this is the week to watch. It could be, or maybe it's next week. We don't know. Once the breaks happen, down, up, then we can have a technical opinion on that. Who's winning, the bulls or the bears? Which traders are putting down their money? Are the bulls winning? Are the bears winning? Right now, again, if we go back to the spiders, caution is warranted because we're getting bearish engulfing patterns. We need to break out and set new highs. Otherwise, right now, keep an eye on 285 if the 50-day falls, okay? So this video is a little longer than I expected anyway, but I just wanted to cover some of the major indexes and what's going on. That's it. Wish you guys all the best. And then on Monday evening, we'll do a little bit deeper dive into like Apple and some other stocks. Take care, gang. See you tomorrow.